Hello traders, welcome to the weekly market overview with me, Pierre from PAFX. I hope you all having a great weekend and that we have a great trading week next week. So this week we're gonna do the usual markets that I always do, and I hope that you guys been planning already your trades, and now you have the possibility to compare your trade plans. As you see, guys, the registration for the next upcoming batch and course is now started, because the ongoing batch is about to end, and the next course will start the first week of June. So if any of you are interested, please visit the homepage pa-fx.com, and there you're gonna have all the information you need, or you can just send me an email if you have any questions. As usual, let's roll the disclaimer, and I want that you please read the disclaimer to know about the risk involved in trading, and that this session is only the way I see the market and the way that I gonna trade it. So it should not be seen as a signal in any way, please. If you like this session, please do not forget to hit the like button. If you are new to this channel, welcome to all of you. Make sure to subscribe and to put the notification on, so you get notification when we go live or when I upload any video. I'm not sure who is us in the room today, so do not hesitate to say hi in the chat and let me know who is us today. As usual, I'm gonna give you like 5 minutes at the end if you have any questions, so we will take the questions at the end of the session. So next week we do have some news with high impact, but they are not like the major news we used to look at, but it's a good enough week with some news on some pairs. We start on Monday with New Zealand retail sales. Then we have Tuesday for the sterling inflation report hearings, Aussie government law speaks, and then we have sterling again, CPI inflation year on year, very important number. The forecast is 2.5, unchanged from the previous months, but as you see, the inflation, the CPI number has been going down for every month, so let's see how this will develop. Crude oil inventories gonna move, give us some movement on oil and USD CAD maybe, and FOMC meeting minutes gonna be important to have a look at that. Then we have on Thursday sterling again with Governor Carney speech and the retail sales number. Most of it been red, as you see, so another important number to look at for the sterling, and monetary policy meeting account for the euro. Another Carney speech, and for Friday we do have second estimate GDP quarter and quarter for the sterling, and core durable goods orders for the USD gonna be important number as well to look at. Carney speech again, and then we end the week with Fed Chair Powell speaks as well. Gonna also be important to watch that and see if there is any change in the language. So in terms of technicals, we start with the Dixie, and we are on the weekly chart, guys. Hi Trung Lee, Christina, George, welcome guys, Liam. Nice to see you here, all of you. We start on the Dixie on the weekly chart. As you see, well, you see it clearly that the dollar been moving very strongly to the upside after we broke this range, and now we start we broke this major area here, which for me the dollar is now inside this important range here, I'm talking about this range, as you see. And we are reaching toward an important resistance level, where we do have the 200 weekly moving average as well. 38.2 Fibonacci could give it some problems, but as for now, the dollar been moving very strongly, and there could be some price, the market pricing in probably 4 rate hikes for the dollar, because we've got some bad numbers and nothing is standing in the way of the US dollar despite some bad numbers as well. On the RSI and the weekly, we are at the overbought territory, and we start getting some bearish hidden divergence, as you see here, between this high and this high, where we actually on the price we have a lower high here. So we do have some signs of bearish hidden bearish divergence, but there's no idea to start guessing anything. I think structure wise we do not have anything on the way until we reach this area up here, where we do have the 38.2 Fibonacci level. That may give it some trouble or give us some correction. Overall bullish on the dollar since we broke outside of the range, then broke out above the 200 moving average, above this descending channel. So everything been bullish on the dollars since then, and we are not really getting deep correction, and it's moving in a fast manner. So overall bullish, as I said, and we should be looking for any reasons that send the dollar a little bit lower, and to try to buy those dips if it is some kind of news event or whatever, push it down. But I am more interested to keep buying the dips instead of selling reversals. Daily time frame, we do have also some bearish divergence as well here going on, but nothing interested until we start reaching this important structure up here. We are close to that level now, and we could probably test it. And as you see, this high up here is the major level that really gonna change the bias totally for the dollar, because a break above here will open a very new area that we've never been traded it since a while. But let's take it one step at a time. Keep an eye on the 94.10 up here. This is an important level, with the hidden divergence on the weekly and the hidden and the bearish divergence on the daily. There is some early signals that we may get some corrections. The correction on the way down gonna be this level, is not the most important one, but this one down here, the more important level that we may find buyers, or may be defended by the bulls down here. So once again, overall bullish on the dollar, and buy the dips is my idea. Gold, now we can probably say finally we broke this range. We've been ranging inside this box for a while now, and this is the weekly time frame, guys, and been bouncing between the 1300 and the 1360 area up here. And now last week we got a very strong break below this important 1300 level, and as you see, it was a major candle that broke below the 200 moving average that been acting as good dynamic support, and below this psychological important 1300. So we are looking right now at a broken structure, and the idea is, if we get a correction up toward the 1300, that would be the first level that we should be looking for a possible continuation down now after we broke this important structure here. So this is the idea mainly on gold. I am also eyeing this possible A, B, C, D scenario. So if this happened and we got a rejection at the 1300, and of course if we continue lower and break below this swing low here, this would send the dollar back down toward the 1260 area, where it could complete an equal measured move A, B, C, D. The D leg gonna end at the 1.618 if so, which is a good extension and a good support level that been acting as support and resistance in the past, as you see here. So very interesting chart. Make it a little bit easier now when we broke below this structure, but we want to see that it gonna hold below the structure, that it gonna get rejected, because if we enter back inside above the 1300, we're gonna get another choppy and not as fun market once again. So keep an eye on this 1300, gonna be a very good level to watch for possible continuation down. Oil still in a bullish trend, almost on all time frame, as you see. And as I said last week, as far as we have those worries about the deal with Iran and if they're gonna be able to keep producing and selling oil as much or not. So this whole move been pricing in a scenario where Iran probably could not keep selling oil as it is doing right now, and seeing both oil going up and the dollar, there is something that not is, they are not in sync, and something gonna happen. One of them gonna drop. As for now, seems that oil did stuck at the monthly R1. As you see, we not having the same momentum as before, going sideways, squeezing nicely, and giving some bearish divergence on the RSI. But once again, guys, weekly, daily, 4 hour, almost on all time frame, it is a still bullish market. We know for now that we are at a resistant area, and to really break and give momentum, we should have some really bad news coming out, especially on the Iranian deal. Otherwise, I think if nothing new happened, we could see some ranging, probably in this upper range. And if that broken, then we're gonna have another bigger range down here. So the first level is still at the same one as we talked last week. We're still looking at the 69.50 as a first possible level for a bounce. And if broken, then of course we're gonna play the 67 area down here once again. So this box here gonna be in play once again. Okay, we need some dip down to really be able to buy oil. Otherwise, I think it's very expensive right now. And even though the trend in your friend and everything like that, I like to see some corrections before buying on anything. Aussie New Zealand performed very well until last Friday. We've got a major rejection here, dip down back below the monthly R2, back below the daily 200 moving average. It is now above this important structure, breaking new highs, broke this high here and broke all these highs on the way up here. So first level we should be looking at is this structure down here to see if it's gonna act as support again, since it's been acting as good resistance and tested as support. So this should be the first area we should be looking at to see if it's gonna hold and bounce once again, or if it's gonna break. If it breaks, I think it opens the door for a deeper correction, probably toward these highs, or even lower to test these lows once again. So keep an eye on this structure here as first level. Otherwise, we're gonna see a deeper correction on Aussie New Zealand. 4-hour time frame, you see how it was making divergence before the rejection up here between this high and this high, and on the other side we've got a bearish divergence and start moving lower. It was about to break the neckline down here, so there is not much left to test this important support level and see if it gonna holds. Once again, if broken, then we may see some deeper correction toward these areas down here. Very interesting chart, and probably it's time for New Zealand to get a bit stronger. It's been hammered a lot the last months or so. Aussie USD, we keep playing around the 0.75 area, breaking below it, breaking above it, back below it, and now last week it managed to close above 0.75 once again. Rejection the previous weeks, and last week there was choppy market consolidation, but back above this important level, and we should keep seeing this level as an important level once again. What we do have here, that first higher low now been made. We never broke a new high though, so one could not be very sure about a possible reversal yet. We do have some kind of inverted head and shoulder here, if we're gonna look at it like this. Left shoulder, head, right shoulder. But for this to really move higher or give us more reversal, we need to see the neckline broken. So keep an eye on this 0.75 area, as you see down here. And for more upside, you want to see this level broken, retested, then probably we're gonna test higher to reach this structure up here. We do have some Aussie news next week, so could be the catalyst for that. We should keep an eye on that, but these are the structure that we should be looking at for the pair. Swissy Jappy, very strong move from monthly S2, kept going higher and higher, broke S1, reached monthly pivot point, but structure wise, if we look at it, we've not broken any major swings yet. So the first major swing that need to be broken to really call this trend possibly ending, the downtrend, is up here at the monthly R1, where we do have this major swing high. We never tested this major swing low. It did close the gap and reversed at monthly S2. We did enter the trade for my part. I did enter the trade a little bit late when it went back above monthly S1, because I was looking actually for the pair to probably do this and give me another test. To, if we got this test of this area, would be much better level to be sure of, more sure about the reversal. So what it done, it did reverse at the monthly S2 earlier than the structure, and of course when it went back above the S1, one could be more sure that there would be more continuation. So we had an eye on the market when we reached this level to see if we're gonna get any resistance. We got some resistance on lower time frame, but then it broke and continued. So downtrend still, and you want to see this level broken to call this downtrend for an end. So keep an eye on this structure here. If we move higher, this is gonna be the first important level around the monthly R1, where you should be, or you probably could see some reversals. Let's take off. This was a call from last week if we got the retest, and as you see, the pair been doing higher highs and higher lows all the way here. We've got some troubles here, rejected, but then the continuation and back above this important dynamic resistance, the 200 moving average on the 4 hour. We broke that as well. So for next week, if this will continue higher, we should keep an eye at the 110.40 down here to see if we got a bounce back from this level to really test these previous highs up here or not. So for now, short term, it is an uptrend, and we probably could follow this uptrend and see how far it goes. So keep an eye on this structure as first and see if we're gonna get a bounce higher from here. Euro Aussie broke this major trend line now, is broken. We broke below this neckline, so we had this double top scenario. The neckline is now broken below MS1. Everything about this leg is now bearish, and we are heading to the first trouble area, which is the monthly S2 and these previous lows down here. So as a first level to look at for a possible bounce is of course this level down here, to see if you get any bullish evidence on lower time frame. You probably gonna get a possible bounce on these lows and monthly S2, at least a retest of these broken structures up here or a little bit higher could be a nice counter trend of this move to the downside, counter trend trade. On the 4 hour, you see it more clearly. We broke below this structure, retested, broke below once again this important structure, and last week we've got a very nice flag on the 1 hour, but there was no continuation late in the week, and we never broke the S1 to reach targets. So there was a short-term trade here, was expecting if we test this level to bounce lower or the break of the flag. So we should keep, if you are holding a short, keep your shorts and start looking to take profit when or if it reach monthly S2 down here. EuroCAD, another euro pair that breaking lows and making lower lows and lower highs. Euro have been very, very weak lately. So for the EuroCAD, we broke another major trend line. It is the inside trend line. Let me go to a higher time frame. So after this strong move to the upside, we got this inside trend line here that now is broken on the weekly time frame and on the daily. We broke below monthly S2. We broke below the 200 moving average on the daily as well. We've got some retest last week. So if the pair does another test of this structure here, that could be the level if you want to take a trend continuation. If you're anticipating continuation of weakness on the euro, then this area up here is your area to look at. 4 hour time frame, let me take off some of these. You see here that we've broke below the structure, got a retest on Friday, but keep an eye a little bit higher here. to see if you got a rejection and continuation to test this important structure down here. Euro sterling. Now we got our first lower high, as you see here, and after this break to the downside, we actually broke this swing low as well. We broke below monthly pivot point. We broke this minor trend line, and we are trading below this support and resistance level that we've had for a long time now. So lower time frame, we've got this possible double top. We broke the neckline, and since this break below, we've been saying any retest to this structure, we're gonna try to sell it. And I think at least one or two in the room having a sell on euro sterling here. I still think as well that we could see a continuation down, but the pair need to keep holding below this structure, below the 200 moving average on the 4-hour and below this structure. Any break above this could send us once again to test a higher area. The best thing would be if we break this flag now, something like this, and then we could keep moving lower to reach this area first as a problem area, and then monthly S2 if this area got broken. Euro sterling, Euro Jappy. Let's go to the weekly time frame and see where we are right now. So as you see, guys, this 200 moving average as on the weekly been acting as good dynamic resistance here, and now many weeks been testing it, and it been holding as good dynamic support. Last couple of weeks, indecision weeks here, spike up, spike down, not really going anywhere, but we still have this important level to look at. So this is an important level, and if broken, we're gonna test this area down here as well. On the daily time frame, what happened here? We got higher high, we broke above these all these highs, but then we went all the way back down, broke another low here. So it is very hard to predict any trend here. One could use the 200 moving average on the daily here as a good reference point. As far as we are trading below it, we should be trying to sell the rallies, but to be more sure, keep an eye on this area down here. The 129.30 is an important support now, as you see here, and if this support got broken, we're gonna go toward 127.60 area, and below that there is much room to the downside. Yeah, so we had one swing low, one swing with a lower high, major swing, and we probably want to see where this end, this leg may end, if it's gonna be here or a break. But before that, keep an eye on this structure down here. We want to see this broken before any movement or any more selling on the pair. Yeah, Euro New Zealand tested the highs here, gave a very nice evening star formation, possible double top, and reversed. We should be watching this level now. For now, we should keep an eye on this level, because we want to see if this will move more to the downside. We want to see this neckline got broken, 4-hour time frame maybe could be a good signal. Daily close below this structure even better, so we want to see that broken and then retested, and if so we're gonna be moving lower. The 200 daily moving average is coming from behind, could give it some troubles on the way down if we break this neckline. So we have a possible double top with a very good bearish divergence here. And right now, if you are holding a short, you should keep an eye on this structure if it's gonna get broken or not. Yeah. If we look left, you see that these two bullish bearish candles was very strong. We never had such a bearish candles body size for a long time. Maybe back here we had such a strong candle, or this one. So the bear seems to be in control so far, but look for this level to see if the bull's gonna defend this area or not. If they do not defend this area, we surely moving much lower on this one. EURUSD also very bearish, below the daily 200 moving average. Below we broke, retested monthly S1 and then broke below monthly S2 as well. We should see the pair testing this structure down here. Structure wise, there is nothing here. We should probably see it testing this support here, and the major support is actually if we break this level at the yearly pivot point down here, because this, if we look left, gonna be the level that been this very long time range down here. So as you see guys, this important structure here is a good support level, and as I said, if that get broken, this got broken, we probably gonna test even lower. So keep your eyes on this structure if you have any shorts on the pair. Weekly time frame, you see it clearly here, the opposite of the Dixie. When we broke below this range, we've been moving down in a very fast manner. It is still above the 200 moving average on the weekly, and you see this structure, this first structure and this second one, why it is an important level if we reach that. Sterling Aussie sitting at support right now, so where the price is testing right now, this structure is a very important structure for the pair. I see a lots of pressure on the pair. You can clearly see it. This is the first lower high. Then we've got a bounce here with this 3 days, but after that we got another lower high with a bearish engulfing, and last Friday was another push lower and did close at the lows of the days. There was not much profit taking here, and it looks very pressured. When this pattern happens, usually it is a build up to break out, and I think we possibly gonna see the breakout happening to the downside, but no more downside until we see this structure broken. The price need to break and close below this structure. On the 4-hour time frame, you see it once again how clearly are the lower highs getting very all the highs getting lower, but we've have equal lows here, and what we're looking for, if we're gonna see a break below, to sell the retest. And if that happen, look left here, there is no structure at all below this, all the way down here. So very interesting. I'm keeping a very close eye. Had a nice short on the break of this counter trend line, but of course targeted previous important structure here, and I'm looking once again. I want to see the break below to happen first. Sterling CAD had a little bit better chance than the previous one, but daily time frame we still have lower lows, lower highs, bearish structure. The difference here that we do have a possible double bottom on the daily time frame and a bullish divergence on the RSI. So here we do have some signal of possible reversal. Monthly S2 is still acting as good support. We broke below this structure, but we could not see a break below the monthly S1. Now, to really call for any possible reversal, we want to see at least one swing high got broken. So for this to reverse higher, we want to see this structure get broken, or at least this short-term structure. Let me go back to the daily. So mark this level as your possible reversal level. You want to see the daily candle close above this structure, and then you could trade the retest on lower time frame. And of course, next trouble area gonna be these highs. As for now, still bearish market, and we should see this structure as possible level where we're gonna see another bounce to the downside, because this could also happen that we go inside this range for a little while before we get a break outside of it. And of course, I do not need to mention it, if we break below this monthly S2, you see that same here, there is no structure until we reach this level down here, yeah? And we do have the daily 200 moving average that could give us some troubles on the way down. But the structure for me is much more important. So if we break below it, I'm gonna see this level as the important one and not the daily moving average, because there is no confluence at that level with the moving average. Sterling USD still sideways, but as you see guys, we're getting lower and lower close now. We've been here, but the close was always somewhere in the middle, hugging the 200 daily moving average. But now once again we broke and closed below it. We did a retest, and last Friday close was a very important signal in my opinion. Such a low close here, showing that there is still a lot of bearish pressure on the pair. Early here we could at least test these highs and these highs, but the last 4 days was not much of a test higher, so the range is moving lower and lower in a slow manner. And we do have two important levels below that. This structure down here is what we call the Brexit lows. On the day of the Brexit, the lows are at this structure, so it is a very important area. As you see here, this box gonna probably give some support, and if we really do enter inside that, we're gonna have this swing low that could act as a possible support level as well. But very strong bearish move. We start getting some slightly of bullish divergence on the RSI, as you see here. So keep an eye on that. Keep an eye on this structure. Monthly S2 need to be broken, and there is not much room until we reach next support level. So it is a trouble area once here and once here, but you have the trend behind you, and if nothing major happen for what's going on in the UK on Brexit and all that stuff, we probably gonna keep seeing this moving lower. Do not forget that the CPI is next week, and that we've been seeing lower and lower CPI number all the way since December. So if this continues to give us lower numbers, then this breakout to the downside and even more probably gonna happen, guys. New Zealand USD did reach an important level now. Last week we did a test of this level that I had on my chart after moving very strongly to the downside. What I don't like about these levels, when I have such a level that I see as a possible support, and then I have another structure below it and another structure like this, make me a little bit cautious entering along. I would love to go long if we got the test of this structure much easier, but the reversal happened at my at this level that I had earlier, and we could not call it a real reversal yet, but at least the bounce happened at this level. The pair is oversold. We did have bullish divergence already since these lows. As you see here, we started getting bullish divergence. This is the first time we do have the RSI on 38 since we was on the oversold area. So there is some hope for the pair now, but there is much more to show us before we call a reversal. 4 hour time frame, we have a little bit better structure. So as for now, the first higher low here, we did close at the monthly S1 to really start looking for more up. We want to see another higher high and another higher low to probably have a chance, and then we do have this important structure to work with as well. We want to see that broken to see more on the upside. So for the New Zealand fundamentals, they're not been very well so far, and we do really need major things, positive things happening for the pair to really start talking about any reversals. But as I said, guys, I'm still cautious since we never tested these lows. Usually the market like to test these areas before a continuation up. If you are in a long trade, you should keep an eye on this structure here, this previous support and resistance level, as a first area of trouble, because we could see a reversal from that area as well. USD CAD, troubles all the way on the pair. Been very choppy since we left this range. I was happy that okay, finally we left this range. Now we do have a direction. So we've got, they trapped the bulls, they trapped the bears, and we've back inside this upper range now. I still see this level as a good resistant level for now. As you see, it is a trouble area. It was testing here, here as well. It was the high of this range that we got here for a while, the fake out and then back inside. So we should still looking at this 129.20 area as a possible resistant level. If you're new to trading, I would recommend you to not trade the pair right now until we got a better direction. As you see, everyone is trapped, and we are start to seeing once again squeezing in the market. So we need to leave this triangle to really get a direction. Short term, let's go down to lower time frame. You see it clearly here. If we want to move higher, we need to see a break here. But once again, the next structure level is where we got this very strong move to the downside, and this gonna be a possible resistance. Or if you want to sell this retest here next week, then you should be looking at monthly pivot point and these previous structure as a possible support level. Nothing will happen until we leave this range once again. So that's why if you're new for trading, there is much better opportunities out there until this start trending and making your life a little bit easier. USD JPY, of course, one could expect some troubles at the 111, where we do have monthly R1 as well, where we do have previous structure, been support here, resistant here, and it is a trouble area. The pair been moving in a very strong manner since we broke this neckline here. We broke the important 108.50 area as well. Did a retest and kept going higher. So back above the 200 moving average on the daily. Everything about it is bullish. The only thing is not bullish is the bearish divergence on the RSI on the daily time frame. For me, I think we should be waiting for a possible correction lower before any buys. So 110 is your first level that you should be looking at as a possible level where the bull's gonna defend. If that broken, then we should go back to 109.80 and see, 108.80, and that would be your second resistant support level. You see here how we broke above the 200 moving average on the 4 hour, and since then we've been trending higher. I think the 110 level is a very good structure to work with as a possible support level, and see if we're gonna get a continuation on the pair. If we look at the Japanese future, you see that 111 on the dollar was the same level with this neckline on the Japanese future. So it is a very, very important level, that 111. On the daily, the future as well are below the 200 moving average, and this neckline should be a good important support level here, down here. Structure wise, we're still in a bearish structure, but one could probably expect a possible bounce to retest these highs before another push lower, and that would be this bounce to the downside. If so, on UJ, give us 110 probably. If broken, probably a lower level to take a buy from. Still buy. I'm interested more of buying the dips on the pair. Bitcoins, we broke outside of this range that I've been talking about a few weeks, or last week as well. So we had this range, we broke below it, retested, and another move lower. We've been looking to reach this support level as a possible bounce level. It never tested that area, but once again we are still in a bearish move here. Lower low, another lower high. If we reach the level here, 8,700, could be another reason to short it from that area. But we could see also, let me take off these, they are trade done with these now. So on 4 hour time frame, you see that after this move here, we start making higher highs and higher lows, and for this to really reach this level up here, it need to break this neckline. It need to break up like this, do a retest, and then maybe give you the retest of this now a major structure. Nicely break below the 200 on the 4-hour retest and rejection. So for more up, look for a break of the neckline to reach this level, and then probably sell it from that level. Targets to the downside, 7,800-ish area. This is an important support level. And let's take a look at the Dow. So since we broke above this important trend line, we've been talking about this major swing high to be an important level. Now what happened, that we got a break above it, but then rejection and back down below, and another try on Thursday, and Friday was a doji. So the market is squeezing in once again. There is probably a lot of bulls trapped in this move. The question is, where are the stops? The move to the downside was very strong and back inside or below this previous high, and right now sideways. So we have a clear range to work with. We've got a retest and the bounce to the downside, but no break below the 24,600, which is an important level. If the Dow to move lower, we want to see this happening, a break below the retest that failed to hold above and back down. And as a resistance, we still see the 24,800 as an important level to sell if we reach that level once again. Yeah. So it's sideways right now, and you want to see a break retest for a continuation up, or a break retest to the downside for more downside on it. And that was the last market for the day. As usual, guys, couple of minutes for your questions, or you have any other chart you want me to look at. Does the future correlates with the other yen pairs? Yes, they do. Timothy. Timothy is asking if the Japanese future correlate with the other pairs. Well, they do correlate. If the Japanese future are weak, the Japi gonna be weak against all other pairs. But of course, the Japanese future is like you're looking at the mirror of USD Japi. So if you write Japi USD instead and go to the daily, you're gonna see the same, almost the same chart. As you see, when I flip those like this, you see it the same. So of course, much it's like 98% of the chart of the Japi USD. And if the future are going down, most of the Japi pair gonna be weak. Depends on what currency we are pairing it with. Now, since the US dollar been so strong and gold broke below that 1300, we knew that the future is gonna break as well and continue lower to reach the structure. I hope that answered your question, Timothy. And any other question, guys? Let me see. I don't see a lot of likes. We are like 32 viewers now with only 13 likes. Why? See you in the room, Liam. Of course. Thank you for being here, buddy. So another 30 seconds or so, and if I don't see any other questions, then we're gonna call it a day, guys. Thank you too, Christina. See you in the room. I saw your charts. They're looking very, very good. I think we had the same ideas about Euro Aussie. But yeah, see you later in the session tonight. Thank you, George. See you in the room. You're welcome, Ahmed. Okay, guys, I don't see any other questions. So thanks a lot for being here. And yeah, see you next week. Bye-bye.